PYX Resources. We're a mineral sands mining company listed on the National Stock Exchange of Australia and on the main market of the London Stock Exchange. Mineral sands, even if the name doesn't mean perhaps not much for you, you all know what covers your ceramic tiles, your bathroom furniture, your dinnerware, what makes it white, hard, scratch resistant and chemical resistant, that is zircon. So on the mineral sands, it's actually alluvial deposit, so it's sand itself, like mining on the beach, which encompasses mainly zircon, titanium dioxide in forms of rutile and ilmenite, and monazite, which is the source of rare earth. As I mentioned, we're listed. We are in production, so it's not a junior mining company. We are in production since 2015. We originally did our IPO in February 2020, which was the start of COVID. So we have been in production for 4 years, 2 of them being COVID year. We have 2 tenements, one in production, the other one is not in production yet, both in central Kalimantan, Indonesia. So that's the Indonesian part of the island of Borneo. We have very large deposits. Most of our assets, which are York compliant from Australia, everything that has something to do with the valuation of the company we do out of Australia, so auditing, engineering, and geology is done out of Australia. So we're the 4th largest zircon resource in the world, the 3rd largest one in production. It's a very high quality resource. On one side, we have, for those who follow mineral sands, most of the mineral sands companies in the world are ilmenite miners with byproducts of zircon and rutile. So they have much more ilmenite than zircon and rutile. We're a zircon mine with byproducts of ilmenite and rutile. That is very important because that gives us a much higher assemblage value. That means every time you take a ton out of the ground, it has a higher margin, and this is the margin that we get from nature. So we have a very high concentration of zircon. Also, Kalimantan sands are very much liked for the high whiteness, the low radioactivity in terms of thorium and uranium, usually less than 500 parts per million, and low alumina content, which makes it ideal for the production of innovative products such as batteries for electric vehicles, semiconductors, energy cells, etc. So although most of the zircon is used for heavy industry, ceramics, foundry industry, refractory and chemical industry, the biggest growth and accelerated growth is in innovative technologies. Timing for our project could have not been better. I mean, again, 2020 COVID, it was still a good year for several reasons. First, you know that's when the tension between Australia and China started. Australia is the biggest exporter of mineral sands in the world. China is the biggest importer of mineral sands in the world. They don't like each other very much. We're in the biggest Belt and Road country, so Indonesia is the biggest strategic ally of China's Belt and Road strategy, and with that, China likes buying products in Indonesia, which was a big advantage. China was the first to come out of COVID. At the same time, the industry had predicted that there would not be enough zircon supply for the demand, and in 2021 there was not enough zircon in the world. Prices went from $1,400, $1,500 per ton to today $2,000 per ton. So even 2 years ago, with the mineral and metal crash in June, zircon went up that month. So it has proven to be a very stable category because of that lack of supply. It's a minor mineral, so it's an off-market mineral. So the price is free of speculation and actually the result of only physical trade. Also, since 2020, 2021, zircon, ilmenite and rutile is on the list of critical minerals required towards the transition to carbon zero by most developing countries. It's on the list of Australia, European Union, the United States. It's the 24th critical mineral for China, because China doesn't have it. So, and because of the need it has in these new technologies and clean technologies. which talks a little bit in your direction. We'll talk afterwards. Being alluvial sand, the process is also gravitational, so that we don't use any chemicals in the process, so it's mainly separating the valuable minerals by gravity. So since the beginning, we have been working on our fundamentals. So over the last 4 years, we have been increasing our volumes. Since the beginning, we have never had inventory. Everything we produce has been sold in advance. Again, there is a lack of supply, so selling is not the problem of this mineral. It's mostly our focus has been to develop the industrial side of the process. Everything, one of the things if we talk about the risk of Indonesia over the past, it's a developing country, so we have to be very careful on how far we go back, because every year there's an improvement. But you know that nickel industry had problem in Indonesia, because the Indonesian government demands to process the material. Australia, South Africa is allowed to export concentrate, so the process they do is the mining process and they export it. We have to process. 100% of our production is processed material, so we follow.
Is everything processed in Borneo?
Everything is processed in Borneo. So we have a mineral separation plant with a capacity of 24,000 tons. Everything we export is premium zircon, so with a grade of 65.5. Our rutile, since this year we're licensed for rutile and ilmenite, we worked very hard to lobby with the government in Jakarta and change the Indonesian mining law. I have on the board a gentleman called Dr. Sukiya, who used to be managing director of the coal and mining industry in Indonesia, so we know Indonesia very well. He is the one that implemented in 2012 the new mining laws and the ban on non-processed material. The way we have convinced the government is that Indonesia now looks at processed material only for strategic products for Indonesia. And strategic for Indonesia is where they're leaders: nickel, bauxite, and coal. Other materials, but they wanted to get the royalty because they're minor and they're not leaders in the world. So since then, we have exported also ilmenite with a grade of higher than 45 and rutile with a grade of higher than 90. So we're shipping all three categories now. So we have been working very strong on our fundamentals year after year. We have been improving our fundamentals. Just here some examples. We have been increasing the amount of minerals sold. Last year we had a total of 12,000 tons coming from 3,000 tons in our first year. Our EBITDA, we're very proud to say that in June we announced our first positive EBITDA, which is not very often seen in the mining industry. I mean, we have been in production for 4 years. 2 of those years were COVID and we're already positive. So that's a big success of our team. Our adjusted EBITDA has been growing as well, but the most important is that we have a clean EBITDA. Keep on going in the wrong direction. So as you can see here, we have been growing our zircon sold with a CAGR of 14 over the last 4 years. Our revenue with a CAGR of 26, our underlying EBITDA with 12, and our cash has been growing too. We have $8 million on our balance sheet and we have no debt. So we are a stable, safe country. All of our personnel is in Indonesia. The only exception is Queen Itsang, who's joining us, who is in charge of finance. So we control finance and cash out of Hong Kong, and all the rest of the operation is in Indonesia. But as you saw, we're Sydney, Australia registered company listed in Australia and the United Kingdom. I won't spend too much time on mineral sands, but as I mentioned before, these are alluvial deposits, so the secondary deposits, usually created either on oceans or beachfronts, rivers, or through wind. We are river deposits, so one of our mines is down the Kahayan River, the biggest river in central Kalimantan. The other one is down the Katingan River. So based on the different specific weight of the materials, they build pockets around the river, old or ancient riverbeds with highest quantity on, we have the highest concentration of zircon, as we're going to see in a second. So as I mentioned, zircon is mainly used today for ceramics, so they cover the ceramics, but for the same reason it's covered for ceramics, it's used for space programs. So the Ariane program, when we used to sell it to France, was covered mainly with zircon because it melts at very, very high temperature, higher than most of the materials. It has no chemical exchange, it's not magnetic, it's not static. We use it for teeth. It used to be used for fake diamonds, etc. It's also used for refractory, so the bricks that are in foundry, both for melt metals and glass, those bricks are done mainly out of zircon. Foundry, so where you melt materials and give it a shape, and chemical industry. New applications I mentioned, the covering of semiconductors is done with zircon, but also many others, as you can see in the literature we have published, such as batteries for electric vehicles, solar cells, etc. That's where we find the biggest growth. And as I mentioned, with the purity of Kalimantan sands, it's ideal for fused zirconia industry where you use the zircon for this high-tech applications. So this is where you find the highest growth. So you find CAGRs of 20 to 40% in innovative applications of zircon. Going to titanium dioxide, all of the ilmenite is done to create rutile. So basically you have a low grade material. So either you take out of the ground rutile, which has a high grade of titanium dioxide, or you use ilmenite, which is called natural rutile, or you use ilmenite to create rutile, which is called synthetic rutile. 90% of the titanium dioxide is used for pigmentation. What makes stuff white, like paper, that is titanium dioxide. The second application is welding rods, and the last one would be to do titanium for the aircraft industry. So that's mainly the use. Also, it is a critical mineral, like I mentioned on zircon at the beginning. Also, the biggest growth is in high-tech applications. It's also on the list of critical minerals. Very important, at the beginning I mentioned that there was not enough supply. So if you look at this chart, if we skip COVID, where you have the orange much higher than the demand, but immediately after there's not enough supply. If you take today, if you look at the big miners, which are the Iluka in Western Australia and Rio Tinto and the Richards Bay mine in South Africa, they're reaching the end of their mine life. Iluka has announced that in 2 years they have received a grant from the Australian government of $2 billion Australian dollars, and they will start mining for rare earth and processing rare earth in Australia. So that's the end of their mine life, and they're going to go back through the mine and mine for rare earth. So the world is missing the biggest supply of zircon, and Richards Bay is at the end of their mine life. If you take all the actual projects and assume they will happen at the announced time and in the announced volumes, it's not enough to cover that lack of supply. And we know that today nobody's funding new projects. So the future view is that this lack of supply will grow with a CAGR of 2.5 to 3%. So I'm very bullish about prices of zircon going forward. This is a very important chart. Zircon is a commodity, prices go up and down, but if you look at the last 20 years of zircon, which this slide shows, the trend has always been going up, even if you cut through the commodity super cycle in 2012. Also, it's a very consolidated industry. The 5 main players represent 72% of the supply. So with that, in a market where there's not enough supply and it's in the hands of 5 main players, it brings a lot of discipline and it pushes prices up, which we like. We don't compete for customers and we don't fight for pricing. So it's a very nice niche industry to be. Most of the players in this industry, all large players, make money. The same happens with rutile and ilmenite, with a delay of 2 years, but there is not enough rutile and ilmenite in the world for the growing supply. At the beginning I mentioned we're the 4th largest asset. In orange you see PYX with 10.5 million tons of resources. The 3rd one in production, since the 2nd one is not in production yet. So we are on the island of Borneo. Kalimantan is the Indonesian part of the island of Borneo, which we share with the Kingdom of Brunei and Malaysia. Our offices are in Palangkaraya, which is the capital city of Central Kalimantan. Palangkaraya was the candidate of becoming the new capital city of Indonesia. At the end, they moved Nusantara to the east, but we were, and as a result of that, which none mentioned the importance of it, we have an airport, we have hospitals, we have hotels, all the way to the factory and to the mine is a government paved road. We have deep sea ports in Banjarmasin and Sampit, and we just connected our factory to the electrical grid, which reduced our energy cost by 80%. Usually in the mineral sands mining business, the highest capex is logistics, and we did not have to spend on this capex line. So all of our capex was invested in machinery and equipment. Also, as I mentioned, the biggest market is China. China has been mining in Kalimantan for the last 2,000 years for alluvial diamonds and gold. All of our customers have been in Indonesia. They know Kalimantan very well. They have lived there, they have traveled through the region. So we don't have, and the Indians usually as well. So those are the two countries that know Kalimantan best. And the nice thing about selling to those economies is when you talk about it, they know it, and they have put their boots on the ground. So here you will see on the bottom part of the picture, you see the ports. It's all container shipped. On the bottom star, that's Palangkaraya. If you go north, the first star would be our mineral separation plant, so where we increase our grades to 65.5, and a little further north is the mine. On the northwestern part, you see the new mine that's not in production yet, is Tisma. The distance between us and the mine in production is 100 kilometers, to Tisma is 60 or 80. So you see there are synergies between both. We share the same mining. So the same way I said on operations, we're focusing on increasing the volumes. We have now acquired the license and we're exporting rutile and ilmenite. Strategically, I see ourselves acquiring more mineral sands mining businesses in Kalimantan and to consolidate the mineral sands mining industry. We're the only industrial miner for mineral sands in the region. You can find many industrial miners in coal and in iron ore in this part of Indonesia, but not in mineral sands, which is mostly artisan mining. This is what makes us unique. On the x-axis, you will see the zircon concentration, and on the y-axis, you will see the ilmenite concentration. We have to remember, zircon sells for about $2,000 per ton, and ilmenite sells at less than 300. So both of our mines, Mandiri has a concentration of 4.8 and Tisma of 3.3, compared to around 0.5, 0.7 of the rest of the mines in the world. So naturally, we have a higher margin because we have more of the expensive stuff. So the end result of this is a higher assemblage value. So our assemblage value is 3 to 5 times larger than the one of our listed peers. So every time we take a ton of the ground, we have a higher margin. I keep on going the wrong direction. On the top side, you see the Mandiri tenement. This is a very small part. Mandiri has 2,032 hectares of license, on which we're only mining today on 200. What you see there in the middle, that's an old riverbed. What you see gray color, that is mineral sand. So we have very little overburden. The way the mining works, it's mainly done through grizzly, so taking away the big stones. Then we go through trommel barrels to take out the clay. Then we go through jig lines, which at the end are shaking lines, and spirals. So we separate gravitationally the different valuable minerals in order to bring a concentrate to a mineral separation plant. Today, we're mining through third-party contract miners at a relative high cost of $1,500 per ton. Our next project is to invest in our own in-house mining and drastically reduce the cost to $450 per ton. On the bottom, what you see is our mineral separation plant. That's totally in production with a capacity of 24,000 tons per year of premium zircon. We have what you see on the left side, That is our warehouse with a capacity of over 10,000 tons of material. It is empty, as I mentioned today. We have everything that we're producing is being exported. We used to keep ilmenite and rutile there while we were getting the license. Now it's empty because everything is sold. We hired about 100 this year. We started the year with hiring about 105 people in our business.
Quick one, do you do all processing then?
All 100%.
In that area, do you see other companies doing outside or outsourced processing?
There's other artisan miners doing processing, yes. We do not process other people's material.
Okay, but you do outsource some mining.
All of it.
All
of it. So our next project is doing it ourselves. So all the mining is done on our licensed land, but by third-party contractors. So the big next project is doing it ourselves.
Do you process anybody else's material?
No.
No, just yourself.
Yes.
Okay, sorry.
So when we started in 2020, most of our material went, at the end again, with Amado Zircon we could sell to one single customer, but we have decided because of the geopolitics today to diversify different parts of the world. Depending on the economy, in 2020 we mainly sold in Europe and the UK for innovative materials, in France mainly for refractory and the space program. In Spain it's all ceramics in Valencia, in Germany it was for the foundry industry. Then we started moving, we started selling to the ceramics industry of Brazil, Mexico and the US. Our biggest customers always being in China, now India, which is taking a lot of the business from the West. So depending on geopolitics, we have been moving our production, and I think we did right in doing so. Everything we sold in advance, everything is sold in US dollars, so we do not have a currency risk, and we'll see afterwards. Although Indonesia has been incredible economically, if you look at the exchange rate over the last 5 years against the dollar, it has been stable, which not many currencies can say today. But at the end, everything we sell is in US dollars, so that gives us stability, and in case there is a devaluation, it would only reduce our cost of the local.
For how far in advance are you selling?
Sorry?
How far in advance are you selling?
But usually we're selling 2 months in advance.
2 months.
We use an agency for a material called Wogan. They're probably the largest off-market mineral and metal agent in the world. It's an English company, very, very strong in China. They know China very well. So where we give them a commission with a total transparency on I decide the price and I decide the customer.
And as far as geopolitics, Indonesia is actually handling it. If you want to source materials, Indonesia is a very good place to do geopolitical because they're doing a very good job of
Yes.
navigating the West.
Totally agree. So that opens to Indonesia. What not asked at the beginning, why in Indonesia? The first answer is a little bit simple because that's where we have the mine. Usually the question is, how did I get into mining in Indonesia? I'm originally from Switzerland. I grew up in Mexico. I ended up becoming a restructuring CEO of very heavy industry, mostly European on a worldwide basis. So I was in the metal industry. I did the biggest restructuring of a glass company in France. We created the biggest coffee company in the world out of Holland. And then my last business, I was a CEO of a listed company in Spain with 30 factories throughout France, Spain, Portugal, and Morocco. In 2015, I took it from a market cap of 300 million and sold it in 2019 for 2 billion. I was sick and tired of Europe, where I didn't see the future of industry. Also paying 50% taxes afterwards is not a big incentive. And I moved to Hong Kong with the intention of investing in businesses that are strategic for China. And an investment bank approached me saying that one of their clients had a piece of land in Indonesia and they were trying to find a way of monetizing it. I said the only way of doing that is listing the company. So we did the York report, as I mentioned, with geologists out of Australia, the auditing out of Australia. We did the mining, the engineering out of Australia, and we ended up seeing that this was a unique opportunity with a very high concentrate. 9 months afterwards, we were listed in Australia, and 1 year listed, we were after listing, we were listed in the main market of the London Stock Exchange. So, why is it important for mineral sands? I mean, for us it was because it was a unique opportunity But as I mentioned, the biggest supply for mineral sands comes out of Australia, and they're running at the end of their mine life. The second biggest comes out of South Africa. The nice thing about mineral sands, it's not a miraculous discovery like gold. It's something you can see from the satellite. So the world knows where the now finding is, and the expectations is Indonesia will become one of the leading countries in the production of mineral sands, which is interesting for different ways. I mentioned I wanted to invest in things that are strategic for China. Indonesia is the biggest Belt and Road country. They don't have mineral sands, or only 3% of their needs. And we're growing it. We're the only industrial group mining for mineral sands in the country. If, as mentioned, and you told some of the risks, if we compare Indonesia to most of the African country, I would with no doubt say it's much safer. If you look at the change of government from the last president to the actual one, nobody has really heard about it. You have not heard about any social problem. Economically, it has been incredibly stable, growing with levels of 8 to 10%, which are one of the drivers of Asia, which is right now the fastest grower in the world. It's still a low-cost labor country. The minimum wage is at $300 per ton. And being a mining company, it's a very young country, so there's a lot of young people, and being a mining country, it's relatively easy to find miners or with mining expertise. Most of our engineers are Chinese, because again, China has mined here for many years, so our technical expertise is usually from Chinese individuals. So we have them at our mine and at the mineral separation plant, with all of our labor being, with the exception of that, Indonesian. I guess important for your purpose, we hire 22% of female employees, which is higher than the mining average in mineral sands. More than 49 of our people are Dayaks. Dayaks are the original indigenous people of that part of the world. And we work at international standards. I've been in international business all my life. If you look at our industry in this part of the world, it is what you would expect from any other place in the world, which is not always said in Indonesia. I mean, some of the factories work under very, very sad conditions. All of our people go through training. We check what they eat 3 times per day. They have important health care. We have contracts with the hospital in Palangkaraya to take care of them. We work very closely with a program we call PYX Cares with the local community, where we participate in influencing local community, both in the schools of the region, of the training of the people, health program for the local people. Also, if there's floods or so, we have participated. So we like both in Jakarta because of the knowledge we have, and locally we have won all of the prizes of zero accidents for the last 2 or 3 years. The way we reacted to COVID with our people over time, and many other things. So we're happy in Indonesia, and again, strategically, we intend to continue growing in Indonesia.
And government in Ghana is very pro-business, right? Like,
Yes,
they
absolutely.
support you.
We stand for what they want to stand. So even training our people, all the ministeriums have to do some training, and with us they find fertile ground to help us bring that to our people. Again, like you mentioned, we are in the jungle. So this is not doing business in Jakarta. We are in the jungles of central Borneo. So we're operating on international standards in this part of the world. Even hooking up our company to the electricity network is unique. We have a free float of 34%. Our liquidity is in the main market of the London Stock Exchange. We have had very loyal shareholders. The first one under the Phoenix Fund represents it's a Hong Kong fund representing mainly the Australian shareholders, the original shareholders of the company. Takmur is in Singapore, which represents the original Indonesian families. GGN Holding is a Hong Kong company, mainly with Swiss investors that we acquired through the acquisition of Tisma. And Phoenician Group is an investment bank that has followed us from the beginning. Most important, none of these people have ever sold a share. So even with the share price reaching very high values in 2001 when we listed in the UK, nobody has sold a share. They expect our
What was your share value?
we went up to £1. Now it's now we have a very low share valuation with the strongest fundamentals we ever had. So with this, a very big opportunity as I see it for investors.
So did y'all issue more shares? Is that what happens at right share?
No, we have hardly diluted. There was a Malaysian family office that went bust last year, and they liquidated all of their positions in all the company that dragged it down. This year I did something with a US institutional business in 2022, and, which is a company called L1, strong in mining, and they have been selling their shares as well. Once they finish their position, I'm sure the share price will explode up again. So we have been working very hard on our fundamentals. We are focusing on mineral sands, so we're focusing on operationally and growing the volumes. We are exporting rutile and ilmenite at the next project, which we are potentially looking, the board is discussing potentially looking to fund with $3 to $5 million to move from our own in-house mining, for our third-party contract miner to in-house mining. This will drastically reduce the cost from $1,500 per ton to $450 per ton. Now, either we grow organically and we do it in 2 years. I think if we find potentially shareholders to do that, it will make us wait 2 years, and I think it's the right moment to do so. Strategically, we're constantly looking for other opportunities to acquire mineral sands in this part of the world. And just to finish, I want to show you one more. Sustainability, which I think is a lot of what Nan said, a lot of people is demanding. Us being listed in Australia and the UK, obviously we have to follow Australian ESG ruling and UK ruling, which is becoming more and more demanding for the next years, making the reporting part of the annual report. Since 2021, we're part of the United Nations Global Compact initiative, which we have been following year after year. And as I mentioned, we have had many programs in the different areas for our people, for the community, and for the fauna in the region. We have done things for the flora, as planting 10,000 trees around our area. So we have been going over and above what the Indonesian government would expect from us, and done what we believe is right. So sustainability has always been a base on which we built the project, and not a project that is in parallel of our project through this initiative which we call PYX Cares.